Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at AST SpaceMobile.
If you find our talks useful, please consider subscribe, like, and comment underneath. And before we really get going, just a quick reminder that the VIP Algos link is below in the description. It's a genuinely fantastic resource for tracking all the data we talk about here.
Yeah, highly recommend checking that out.
So to jump into the wealth building context for today, I want you to think about that universally understood feeling of, well, just mild panic. You are driving down a slightly unfamiliar highway, or maybe you've hiked a little further into the woods than you planned and you glance down at your phone.
Oh, I know exactly where this is going.
Right. Up in that top corner where you usually see those comforting little bars of cell service, there's just nothing. Or worse, it says SOS. That digital paperweight in your pocket is exactly why AST SpaceMobile is trying to do the impossible.
Which is basically beaming real 5G from space directly to the phone you already own.
Exactly. We are venturing into the wild, highly volatile frontier of direct-to-device satellite internet. And the mission of our analysis today is to unpack the massive fundamentals and the equally massive risks of this venture stage company.
Because if they pull this off, they completely rewrite global telecommunications. But if they fail, they are burning billions of dollars in low Earth orbit.
Yeah, the stakes are just incredibly high, and it is easily one of the most fascinating market stories right now. The promise here is total global connectivity without asking you, the consumer, to change your behavior at all.
Right, you don't have to buy new hardware. But actually building that physical infrastructure in space comes with some pretty brutal financial realities and regulatory hurdles.
So before we tackle the wild stock price swings and the technicals, we have to look at the fundamentals of what AST SpaceMobile, or ASTS, is actually building, because they are touting this massive first-mover advantage.
And to understand that advantage, you have to look at the physical limitations of a normal cell phone. A standard smartphone is engineered to basically whisper its signal to a cell tower that's maybe 2 or 3 miles away.
Yeah, it absolutely does not have the battery or the power to shout its signal 300 miles straight up into space.
Exactly. And that physical limitation is why historical satellite internet always required specialized hardware. You needed a bulky satellite phone with a massive antenna or a dedicated dish strapped to your roof.
Like the old satellite TV setups.
Right. But ASTS is flipping that entire model on its head. Their Block 2 Bluebird satellites handle all the heavy lifting. These feature the largest phased array antennas ever deployed in low Earth orbit.
And for anyone who doesn't know, a phased array antenna isn't just a big metal dish like a soup bowl. It's this flat surface covered in hundreds of smaller antenna elements.
Yeah, it's highly complex. Instead of physically turning the whole satellite to point at a signal on Earth, a phased array system uses software. It delays the radio waves coming out of those tiny antennas by just microseconds, which electronically steers the signal.
But to catch the tiny whisper of a normal cell phone, that array has to be massive, right?
Oh, massive is the right word. We are talking about unfolding a structure the size of a tennis court in the vacuum of space.
A literal tennis court in space.
Yeah, and catching the signal is only step one. The satellite still has to process it. That is where their custom silicon comes in, which is the AST 5000 ASIC chip.
ASIC stands for Application-Specific Integrated Circuit, if I remember right.
Spot on. So this isn't a general-purpose processor like the one on your laptop. It is engineered from the ground up to do exactly one job and do it with extreme efficiency.
All while surviving the heavy radiation of space, which is no small feat.
Not at all. So they have this giant net to catch the signal and a highly specialized brain to process it.
So what does that combination actually yield for the person standing in a dead zone? Our data highlights 10 gigahertz of processing bandwidth across 2,500 adjustable beams. But what does that mean for the actual user experience?
Well, it translates to a projected 98.9 megabits per second download speed directly to an unmodified smartphone.
Wow. Wait, almost 100 megabits per second?
Yeah. This moves the technology way beyond just sending a desperate text message when you are lost in the woods. That speed supports real broadband.
So you could be streaming high-definition video or jumping on a video call and utilizing true 5G connectivity anywhere on the planet.
Exactly. It's a complete paradigm shift.
I look at this technology and I just see a brilliant shift in the infrastructure burden.
Yeah.
For decades, the consumer had to shoulder the cost of the hardware, buying the dish, mounting it, pointing it at the sky.
Right, which is a huge barrier to entry.
Yeah, and ASTS just bypassed that entirely. They built a colossal dish, parked it in orbit, and told the user, just turn on the phone you already have.
It completely removes all friction for the end user. But, and this is a big but, that lack of friction introduces a totally different business challenge. Acquiring retail customers one by one is notoriously expensive.
Oh, for sure. Building a brand, running marketing campaigns, trying to convince individuals to sign up for a new satellite service.
They would have to spend billions of dollars before they even launched a single rocket.
And that leads perfectly into their business model, which is this incredible wholesale moat. They aren't even trying to sell a subscription to individual smartphone users.
No, they've gone a completely different route. They have partnered with nearly 60 global mobile network operators. We are talking about the giants of the industry here, AT&T, Verizon, Vodafone, and Rakuten in Japan.
Which fundamentally transforms the telecom landscape.
Right.
By establishing those partnerships, ASTS acts as the ultimate cell tower for the existing cell companies.
Right. When ASTS turns on their service, they instantly gain indirect access to over 3 billion existing cellular subscribers worldwide.
3 billion. That is almost half the population of the planet, sitting right in their potential customer pool.
It's staggering when you really think about the scale.
It is. Because if I'm an AT&T customer, I don't need to download an ASTS app or buy new gear. AT&T simply offers a premium tier on my existing bill. Maybe it's an extra $5 a month for guaranteed no dead zones.
And the customer acquisition cost for ASTS in that scenario is effectively zero.
Which means any competitor, whether they are terrestrial or satellite-based, trying to start from scratch, has to face down a 3 billion user head start.
That moat is undeniably powerful. But the financial realities of constructing and launching this constellation are, well, they are pretty daunting.
Yeah, let's pivot to the financials and the technicals, because a customer base of 3 billion means absolutely nothing if the company runs out of cash before the network is fully operational.
Exactly. The contrast on their balance sheet right now is stark. In the first quarter of 2026, ASTS generated a minimal $14.7 million in revenue.
I mean, for a company attempting to blanket the Earth in 5G, $14.7 million is barely enough to cover the corporate catering budget.
Yeah, it's a drop in the bucket. Yet they are projecting full year 2026 revenue between $150 million to $200 million, driven by early service activations and government contracts.
But the real jaw-dropping figure is their target for 2027. Management projects revenue approaching $1 billion as cellular broadband goes live in major markets.
Going from roughly $15 million in a single quarter to $1 billion in a year is an incredibly aggressive scaling curve.
It really is. It reminds me a bit of the early days of cloud computing, where massive, capital-intensive server farms had to be built out for years at a heavy loss before the switch flipped, and they generated astronomical cash flow.
That's a great comparison, because scaling at that speed requires an immense amount of upfront capital. They are currently burning over $1 billion a year in free cash flow just to build and launch these satellites.
So when a company is spending $1 billion while taking in just a fraction of that, the immediate question is survival. How are they funding this without collapsing?
It all comes down to how their financing is structured. As of the end of Q1 2026, they had $3.5 billion in cash sitting on the balance sheet, weighed against $3.02 billion in total debt.
And the key detail in our analysis is that $2.9 billion of that debt is classified as long-term.
Right, and that distinction between short-term and long-term debt is crucial. It's the only reason this company is viable right now. The debt isn't due tomorrow.
So that $3.5 billion cash buffer gives them some breathing room. It allows them to target an incredibly aggressive assembly rate of 6 fully completed satellites per month.
Because they hold that war chest, they can fund deployment without instantly issuing millions of new shares to the public, which, would heavily dilute the value of the shares held by current investors.
This is a modern space-age infrastructure boom. You're watching a company spend billions to blast the tunnels and lay down the iron tracks of the new telecom age before a single commercial train has even left the station.
That's a great way to put it. Laying a constellation across the globe is inherently capital intensive. The market sees this massive cash burn today, weighs it against the potential for monopoly-like revenues tomorrow, and the result is just extreme volatility.
Let's talk about that volatility and the market sentiment, because it is heavily polarized right now. The stock price action really reflects that tension.
Definitely. I mean, in June 2026 alone, the stock dropped 21.6% overall due to launch delays and competitive fears. But then on June 29th, it surged 21% in a single trading session.
A 21% jump in one day is massive. But it wasn't unprompted, right?
No, not at all. Japan announced a $912 million subsidy for a Rakuten-led satellite project featuring ASTS.
Ah, okay. Tangible international backing of that magnitude forces the market to really reevaluate the company's legitimacy.
Exactly. And earlier that same week, the stock jumped roughly 20% just because the FCC approved an 800 megahertz spectrum swap.
Which might sound like dry regulatory news, but to understand why a spectrum swap triggers a 20% rally, you really have to view radio spectrum as invisible real estate in the sky.
That's a perfect analogy. Cell networks operate on specific frequencies, kind of like lanes on a highway.
Right, so the FCC swap essentially allowed ASTS to trade their current lane for a cleaner, wider lane that is much better suited for penetrating buildings and traveling long distances from space. It cleared a major regulatory and technical hurdle.
We have this environment where every single regulatory filing or foreign subsidy announcement causes the stock to violently reprice, and the broader market interpretation is split entirely down the middle.
Retail investors are highly bullish. I mean, Jim Cramer went on television and told retail buyers to literally go for it.
But institutional Wall Street analysts are taking the exact opposite stance. The consensus rating among institutions is actually a reduce. UBS Group recently lowered its price target, and Weiss Ratings maintained a strict sell.
And you can really see the depth of that institutional skepticism when you look at the short interest. Currently, 20.35% of the float is sold short.
And just to clarify for everyone, the float refers to the total number of shares actually available to trade on the open market.
Right. So when over 20% of those available shares are shorted, it means a massive contingent of the market, which is valued at around $5.47 billion, is actively betting the company will fail.
Which is huge. But the mechanics of a short squeeze are what make that 20% figure so explosive.
Exactly. It's like everyone standing on one side of a ship betting it will tip.
Yeah, because to short a stock, an investor borrows shares from a broker, sells them at the current price, and hopes the stock drops. If it drops, they buy the shares back at the cheaper price, return them to the broker, and keep the difference.
But if the stock price goes up, the broker issues a margin call. They demand the short seller buy back the shares immediately to limit losses.
Right. So if good news hits and the wind changes, everyone rushes to the other side of the ship to cover their shorts.
And if 20% of the market is suddenly forced to buy back shares at any price just to exit their positions, it creates this artificial, frantic demand loop. The buying pushes the price higher, which triggers more margin calls, which forces more buying.
The short seller's own bets become the fuel for a violent upward rally.
This is why high short interest is a double-edged sword. It fundamentally indicates severe market doubt about ASTS's ability to survive their cash burn.
But it also primes the stock for an explosive move upward if the company actually executes. Any positive news that validates the bullish thesis forces those institutional bears to cover their positions, accelerating the momentum.
Which means the market is obsessively watching the upcoming catalysts calendar for anything that could spark that forced buying panic. Or, conversely, validate the Wall Street bears and send the stock into a tailspin.
And there are three specific massive catalysts on the near-term horizon. First up is a major regulatory catalyst on July 22, 2026. The FCC is scheduled to vote on the Space Modernization Order.
Which is huge, because the current regulatory framework was just not built for companies launching dozens of massive satellites every single month.
Exactly. Securing a satellite license right now can take over a year of bureaucratic red tape. The Space Modernization Order is designed to compress that timeline down to mere weeks.
And when you are burning roughly $80 million a month in free cash flow, time is literally your most valuable asset.
Spot on. If this order passes, it dramatically accelerates the timeline for ASTS to activate commercial services and pull their profitability target closer to the present.
The second and third catalysts revolve around physical execution and financial reporting. In the first half of August 2026, ASTS is targeting the launch of Bluebirds 11, 12, and 13 from Cape Canaveral.
And concurrently, they are releasing their Q2 earnings in August.
Right. Investors are going to be dissecting that earnings report to see if the assembly line is actually producing 6 satellites a month without exceeding the expected cash burn.
But that August launch introduces one of the most fascinating competitive dynamics in the aerospace industry right now, which leads us to the risks and the bear case.
Because ASTS is launching those Bluebird satellites on SpaceX's Falcon 9 rockets.
Yeah, they are entirely reliant on their most severe competitor to deliver their infrastructure into orbit.
It is an incredible irony. You are paying your biggest rival to help build your business. SpaceX's Starlink is the reigning heavyweight in space internet. They have millions of subscribers and the ultimate cost advantage because they build and own the rockets.
Right, they dictate the launch schedule. If SpaceX aggressively pivots their immense resources toward direct-to-device internet, they could attempt to corner the market entirely.
Now, Starlink's current dominance relies on proprietary hardware. The user still has to purchase a Starlink receiver dish and set it up outside.
True. ASTS holds the clear advantage in consumer friction by utilizing unmodified phones. However, the reliance on SpaceX launch vehicles highlights ASTS's absolute biggest vulnerability, which is execution risk.
And their execution has not been flawless. Our data details a recent major setback where the rollout of full U.S. service was delayed to 2027 due to an issue with a Blue Origin launch.
The timeline is very fragile. ASTS needs to hit 45 operational satellites by the end of 2026 to provide continuous service.
So if this upcoming August launch with SpaceX gets delayed, whether due to weather, a technical anomaly on the pad, or SpaceX simply prioritizing their own internal payloads, the financial math gets brutal.
That delay scenario is the bedrock of the institutional bear case. Every single month of delay represents another $80 million burned without generating the commercial revenue required to offset it.
If launch schedules slip, that 2027 target of $1 billion in revenue slips right along with it.
And suddenly that $3.5 billion cash cushion begins to look dangerously thin, and the specter of debt maturity and shareholder dilution returns.
So the technology has been validated. The partnerships with global operators are signed. The demand for universal connectivity is obvious. The entire narrative now hinges on operational execution.
Can they build massive phased array satellites fast enough, launch them on a competitor's rockets reliably enough, and clear the SEC's regulatory hurdles before the money runs out?
That is the billion-dollar question. So let's move to our final verdict. When we synthesize all the data, the 3 billion potential subscribers, the wholesale model, the terrifying cash burn, and the intense short interest, the consensus analysis lands on a bullish score of 7 out of 10.
But the critical caveat to that 7 out of 10 score is the time frame. This is heavily categorized as a multi-year play, requiring a long-term view of a 24 to 36-month horizon.
Right. It's a venture stage infrastructure play. If ASTS achieves that $1 billion revenue target in 2027 and successfully activates its network of 60 mobile network operators, the upside is immense. They are positioned to effectively monopolize the wholesale direct-to-device broadband market.
But the downside and the existential risks are baked into every single step of that journey. Tracking this requires an iron stomach for volatility.
Absolutely. The upcoming FCC vote, the August launches, and the Q2 earnings will provide the hard data needed to determine whether the 2027 revenue dream is achievable or if the physics and finances of low Earth orbit will just break the company.
It's going to be a wild couple of months to watch.
Definitely. And if you want to keep a close eye on these catalysts, please remember to check out the VIP Algos link below in the description. Also, please consider subscribe, like, and comment underneath if you enjoyed our talk today.
We really appreciate the support.
Before we wrap up, I want to leave you with one final thought. Beyond the stock tickers and the bandwidth specs, the core concept of what AST SpaceMobile is attempting is staggering. Imagine a world where the term dead zone simply ceases to exist.
It would become an archaic concept, like a busy signal or dial-up internet.
Exactly. If universal 5G coverage is achieved from space, the physical limitations that geography has imposed on human communication for all of history just disappear. Consider how that alters human geography.
Yeah, if you can hop on a flawless, high-definition video call from the middle of the Sahara Desert or deep in the Canadian Rockies, the viability of remote work fundamentally changes.
Think about the real estate market alone. Completely off-grid, remote land that was previously considered uninhabitable for modern professionals suddenly possesses prime connectivity. We're looking at an infrastructure shift that doesn't just disrupt telecommunications, it changes where and how humans can live and operate.
It really puts the scale of this ambition into perspective.
It does. Something to think about the next time you glance down at your phone in the middle of nowhere and realize you have 0 bars. Thanks for joining us today, and we'll see you on the next one.